Welcome to the Skilled MBA Finance Case Study Series. Today, we explore the remarkable rise of Ant Group, one of the world's most influential fintech companies. Originally launched in 2004 as Alipay, Ant Group quickly expanded beyond digital payments into wealth management and lending. Its innovative platform-based model redefined the financial ecosystem in China, serving both individuals and small businesses. By seamlessly integrating financial services with cutting-edge technology, Ant Group revolutionized how users access and manage money. This rapid growth culminated in the company's planned IPO, one of the largest in history, poised to transform global financial markets and challenge traditional banking models. The planned IPO of Ant Group was set to be a landmark event, with a valuation exceeding $300 billion. The dual listing in Shanghai and Hong Kong aimed to raise $34 billion, making it the largest IPO in history. Market expectations were high, driven by Ant's innovative financial services and expansive user base. Ant Group, founded in 2014 as Ant Financial, originated from Alipay, Alibaba's 2004 creation. Under Jack Ma's leadership, it evolved into a comprehensive financial services platform. Its core segments include digital payments, microlending, wealth management, insurance, and credit scoring. Alipay revolutionized China's payment landscape, serving over 1 billion users and 80 million merchants. Ant Group's growth trajectory is unparalleled, with active users in the millions and transaction volumes surpassing China's top 4 banks. By 2020, it became the world's highest-valued financial technology company, revolutionizing financial services and setting new benchmarks in digital payments and financial technology. Ant Group's historic IPO plan involved a dual listing on the Shanghai Star Market and Hong Kong Stock Exchange, aiming to raise $34.5 billion with a valuation of approximately $313 billion. This would have surpassed Saudi Aramco's $29.4 billion IPO. The retail offering was oversubscribed 870 times, attracting $3 trillion in bids from over 19,000 institutional investors. On October 24, 2020, Jack Ma criticized Chinese financial regulators at the Shanghai Bund Summit, likening traditional banks to pawn shops. By November 2nd, he and Ant executives were summoned for regulatory interviews. Just 36 hours before the initial public offering, authorities suspended it, citing regulatory changes. On November 10th, draft antitrust rules targeting internet platforms were published. Alibaba shares plummeted 8% in Hong Kong, erasing $76 billion in market value. This regulatory shockwave froze $3 trillion in investor funds and led to a 5.4% average decline in Chinese tech stocks. Global investors reassessed Chinese regulatory risks, intensifying scrutiny on fintech firms, highlighting concerns over unpredictable regulatory actions. Jack Ma's speech at the Shanghai Bund Summit criticized financial regulators for their pawn shop mentality, emphasizing the need for reform to support innovation. His remarks were seen as a challenge to state authority, especially amid growing governmental concerns about financial risk, contributing to the regulatory scrutiny that followed. Regulators were alarmed by Ant's microlending, which lacked the capital reserves of traditional banks, posing financial stability risks. Ant's vast consumer data collection conflicted with state data sovereignty goals. Operating in regulatory gray areas, Ant bypassed strict banking regulations, raising concerns about systemic risk due to its massive user base and bank connections. The suspension of Ant Group's IPO highlighted China's reassertion of state control over tech, aligning with President Xi Jinping's vision of common prosperity. Rising United States-China tensions and financial decoupling concerns intensified scrutiny on strategic industries. The Chinese Communist Party's focus on centralized authority marked a shift from the previous hands-off approach, impacting tech giants' growth. Ant Group underwent a comprehensive regulatory review, leading to a corporate restructuring into a financial holding company with stricter oversight. They established a credit-scoring joint venture with state-owned entities, shifting from high-margin financial services to a lower-margin technology service model. This restructuring reduced Ant's valuation by 60–70% from its original $313 billion initial public offering estimate. Fintech initial public offerings must prioritize regulatory alignment, especially in emerging markets, by engaging with regulators early. Understanding the political landscape is crucial for initial public offering readiness in complex markets. As fintechs grow, they face increased scrutiny and may be classified as financial institutions, necessitating compliance with stricter regulations. China's regulatory model has reshaped global fintech oversight, prompting countries like India, Brazil, and Indonesia to adopt new frameworks. These focus on consumer protection, banking integration, data governance, and capital requirements. The aim is to balance innovation with stability, ensuring user safety and clearer boundaries between banking and technology services. Ant Group, as of 2023, is undergoing regulatory-mandated restructuring, with Jack Ma stepping back. The company is signaling a potential initial public offering revival, albeit with a revised business model and lower valuation. Ant is pivoting towards payment processing, technology services, and Southeast Asian expansion, aligning with regulatory goals and reducing focus on credit and wealth management. The Ant Group IPO suspension highlights the critical role of regulatory alignment in shaping a company's future. For fintech firms, especially in emerging markets, balancing innovation with compliance is crucial. This case exemplifies the intricate dance between financial innovation, regulatory oversight, and political dynamics in the global economy. Thank you for joining us on this journey through innovation and disruption. Mobile, +91 87553 Email, support@skilledmba.com. Website, https://skilledmba.com.